Good evening, ladies and gentlemen. On today's Stock Market Brief, we're going to be discussing the all-time high and what it has in common with these all-time highs. We're going to discuss Bitcoin and the signal that it just provided and some potential opportunities out there in China. All that and more on today's Stock Market Brief show, where we navigate the financial markets through the lens of technical and intramarket analysis. So let's get into it. All right, people, welcome back to the show. Make sure to check the pinned comment if you want to learn more about the swing trading community and download today's chart deck. We're going to get right into it today. Looking at the 11 sectors that make up the S&P 500. Nothing much took place today, but we did have a risk-on type day, meaning that the risk-off type assets, consumer staples, utilities, they were towards the bottom of the list. And we had a pretty flat day, but something that did stand out was the small caps. So if you watched the prior video, we talked about the opportunities in small caps, right? We put a little Pepe meme up on the screen and said, they shorted it, it's time to pump it. And we got some nice big moves out of those 7 or 8 stocks that we mentioned. If we look at the heat map, this is a year-to-date view of the heat map. So what's really controlling this market, right? We just hit all-time highs. What's the big mover here? And well, it should come to no surprise. NVIDIA has been straight up like a rocket ship. It's already up 20% heading into earnings. So it's going to have some pretty tough earnings to meet, to match the expectation. So we'll see if we're going to get some continued follow through, as NVIDIA did reach up into 600. That is absolutely a bonkers type move right there. Also, we had Apple really supporting the move in a recent trade. You can see the last 3 or so trading days, we saw a nice big gap up and follow through for 3 days. But I want to remind you that this is actually still a lower high as it stands in the price of Apple. Okay, so if it's just doing a lower high, that could not necessarily be a good thing. But we have still an inclining 200-day moving average, so we'd have to get below this 180 zone here to be considered, yeah, I'd say more bearish. So if you take a look here, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 11 out of the 12 weeks were nice big green candles. And now we're starting the week currently up a little bit, getting a little extended from the inclining 5-weekly EMA. So we'll potentially see this pull back a little bit, maybe fill the gap. But we'll get into a little bit more details of where the gamma exposure levels are. This last week, though, I mean, a lot of people might say, yeah, it was a crazy week into all-time highs. But really, it was a very efficient week, meaning that we came down where? We came down to where the lower weekly expected move was. And where did we finish? We finished actually at the upper weekly expected move. You can see that right here on this chart. That line right there is the SPX upper weekly expected move. And we came into it on that big strong rally intraday, and then we just bounced around it here on an intraday basis. You can see today, we also tagged into the upper daily expected move. So it's important to know these and have them on your screen. And the reason why is because this is a forward-looking indicator. It's a way to gauge risk. It doesn't mean that it has to act as support and resistance, but it gives you an idea of risk. And this game is all about risk management. So this is by far, especially during earnings season, if you look at the expected moves for earnings, which we shared a couple prior weeks ago when the first banks started announcing, and they were spot on. If we take a look at the US dollar, this is also continuing to just rip straight up, kind of like NVIDIA is. And what I do find interesting here is it is going straight up, but yet the market's going straight up too. 10-year yield is doing something very similar, how this has been going up since this bullish crossover we had discussed. And, we had a little bit of a pullback today, but overall it's been moving up. And this to me is, okay, who's lying? Who's going to be wrong here? Because when you look at something like the 10-year yield, the dollar, and the S&P 500, you'll notice that when the 10-year yield and the dollar rise together, it's not necessarily a good thing for the S&P 500, which we've seen. It doesn't mean that it has to always hold that correlation, but the correlation has been pretty strong. So when the dollar was ripping, when the 10-year yield was ripping, the S&P 500 went through that 9 to 10% correction. And then when they started falling heavily, that's when the market started really taking off there in November of the prior year. Now, if we look into 2024, take a look. Well, the 10-year yield going up, the dollar's going up, and the S&P 500 is going up. So who's going to break first would be the question. So it's something to just continue to monitor and watch out for. If we take a look at the Bitcoin, the Sailor to Shift tool, this is a signal that I created quite some time ago, and it gives us an idea of, potential buy and sell points for the price of Bitcoin. And basically what it's doing here, I have a video on this. If you want to watch the video, it's probably in the pinned comment, or sorry, not the description below, or just type in Sailor to Shift Tool, figuring out money, you'll find it. But we're measuring, mapping the 4-week rate of change between Bitcoin and gold. And in short, when we have a positive rate of change, when we close a positive level, and then we have to close there on a weekly basis. And then when we get above the prior candle's high, that right there is a buy signal and a buy trigger. The signal comes, the last buy signal that we had was over here in September. And then we had the buy trigger as well, how it got back above this week right here, got above the prior week high. And we started moving from that September area, about 27,500, we'll just call it, to a high of 47,500. Now we did have a sell signal over here. Okay, that was this kind of week right here where we had that kind of blow off move with the news of the ETFs, but we never got the trigger. And the trigger is when we get below the prior week's low. So that never actually took place. What happened was we actually had a positive rate of change, so that nullified that signal. However, now just prior week we closed in a negative rate of change environment, and we got just now below the prior week low. So this right here is an official sell signal and sell trigger. Now, does this mean that Bitcoin come down all the way? Well, no, not necessarily, but you can see through past, like it's spotted some pretty good drawdowns, but there's been plenty of times where we get some whipsaws like so before we get that buy signal and we start ripping higher, even a whipsaw right here, okay? So it could just be a whipsaw. We don't know. It's already 20% down or so from its prior peak high right over here, from its short-term peak high to where it is. So we will see, but how we notice if it goes back on a buy signal is if the rate of change goes back into positive territory and we get back above the prior week's high. In this case, it would probably be this week's handle, unless if something changes there. So it's something to just pay attention to be aware of. Could be a whipsaw, might not be, but and by the way, there's ways that you can use this in other forms, right? Some people like to do it a little bit quicker, like a 3-week, 2-week rate of change, and some people, alter the strategy and the signals or the triggers themselves. The triggers that I'm discussing are just from a strategy I put together. Now, the one thing to pay attention to is Jim Cramer also came out and said Bitcoin equals tough own. Now, this is funny because typically people are contra Jim Cramer, so this right here is probably a big old smiley face to anybody that wants to buy Bitcoin, which would make sense. However, I want to remind people that people said and made fun of also not only Jim Cramer, but the Barron's cover when TLT was reaching down to its low and they said buy bonds now. And everybody, and I think I'm the only one that said it's going to be hilarious if the TLT finds a bottom right here. And sure enough, it started ripping. I'll have to repost that one on my feed. Tier 1 Alpha posted this. So this is one of the charts that I had on my thumbnail, but it wasn't Tier 1 Alpha. So I'm going to show you my chart. But basically what they pointed out here on their Twitter feed or their X feed, it was showing the S&P 500 all-time highs during the 2-10 yield curve inversions from 1983 to present. And then they marked the arrows on the screen where you can see some arrows, and it was, it's not a log chart, so it's kind of hard to see, but we did have some volatility there. You saw volatility here, and this is where we had that 2001, the dot-com bust, the great financial crisis, and then we were currently where we stand now. Now, I wanted to do it a little bit differently because I had a feeling people might be like, okay, what about some of the other curves like the 310? Well, that's what I did. So if we take a look at the 10-year 3-month curve, and then I have the Fed fund rates right beneath us, something to pay attention to. This one seems like it's actually a little bit more quick to act, quick to respond when it kind of uninverts. But you can see here the all-time highs that were taking place while we had these yield curve inversions. And you can see even here into the 80s, into the 90s, I believe in the 90s, we had that recession right in here. I think they actually marked it out on the screen. Yeah, early 90s recession. And we had that volatility to the downside. Then we went on this obviously monster move. All right, and then we came into the dot-com bubble bursting. And then right over here, that was right before the great financial crisis. And you can see we were hitting these all-time highs when we were kind of coming out of that inversion. And then over here in 2019, we did start getting yield curve inversions and the market started pressing up a little bit higher. And then COVID hit. So we can't really attribute this yield curve inversion necessarily to, resolving like this. because it's kind of a, it's a very rare occurrence thing to take place. But nonetheless, we did have the yield curve inversion, and then we had the Fed step in that really altered the course of monetary policy, where we had just this bazooka type cannon movement to the upside. And now we're sitting at a deeper yield curve inversion that we haven't seen since, in the 80s, right? We haven't been this low for quite some time. Even prior to that, this could be one of the lowest it's ever been actually inverted, the 10-year 3-month. I'd have to check, but I don't have it in front of me right now. And we're hitting the all-time highs. So all-time highs, it's not a bearish thing. All-time highs is bullish. However, we just got to be aware that this is taking place in a very similar situation to where we had all-time highs in the past, and then we saw some volatility. And then if you add in the element to the yield, the federal funds rate, this is also in alignment with the pausing of a Fed rate hiking cycle. And then we started cutting rates, and then we started cutting rates and cutting rates and cutting potential. Well, right now we're talking about cutting rates, but the market will see what it prices in. And then that's when the yield curve started uninverting, and we get to see more volatility in the markets. Now, on the last episode that I put out the China Technology ETF, CQQQ, and just how it's been getting beaten down. And it was down even deeper today. It was down 3.9%. They have been getting walloped. And I got to say, it's just seeming like more and more, if you're like a long-term investor, there are some names that just seem to be like they could be potentially good holds. It's just, you're catching a falling knife. So you can wait for bases to form. I don't know how long, everyone has a different time horizon, but, if you're holding it for 5 years, 10 years, 20 years, 30 years, or your retirement, I don't know. I mean, I'll point out some of the bigger names right now, which that can obviously change. But then this is also diverging so much from U.S. equities or U.S. tech like QQQs. So it just blows my mind. And it just has to be, there's something here that I feel like, once something happens, if something were to take place, we're going to look back at this and be like, oh my gosh, it was so obvious, right? I mean, it makes so much sense. But that's just not the case. But if you do look at like the correlation, right? We discussed the 20-day correlation. It spends most of its time positively correlated, but China Tech and QQQs. And right now, this divergence is just absolutely bonkers wild. So it makes me think that, hey, is this going to start catching back up? And that's, an opportunity there. And is China going to step in? Right? There was some, I heard something about they're banning short selling, and, their economy is going rough. So we'll see if, what happens. But is this signaling something or this might catch down to the downside as we're getting a few names, right? Like as we previously discussed from a year-to-date basis, right? Amazon's flat, right? Meta's up a little bit. Google's pretty much flat for a year-to-date, but up a little bit. Microsoft's doing really well too. Apple's flat. Tesla's down a whopping 16%, but it's that NVIDIA, these semis that are doing just incredibly good. AMD's even up 14%, but that took a little bit of a hit today. Okay, so I wanted to show you this chart here. This is FXI, and I'm basically looking at it unadjusted for dividends. And if you take a look at this is China large cap ETFs, right? So I'm looking at the larger cap names. The holdings in FXI are these names right here. So Baba, Tencent, I like JD down here. So these are some of the names, the assets, the holdings, right? The top 10 holdings that make up 56% of the FXI. And you can just see here, we're coming back down to this prior low here from the bear market in 2022. But prior to that, if you look to the left of the screen, we're lower than where we were during the great financial crisis. These are some pretty insane lows. And yet we haven't, personally over here, it just doesn't seem like it's just a whole different story. This thing is falling apart, but yet in, America, in the Qs, right, these U.S. equities are just reaching to all-time highs. So my thought process is to really start diving into some of these names, take a look at JD, how this kind of, I pointed this out to my Discord group, right? Basically, we had some nice volume come in the other day. We have a positive divergence as this is making lows. We said, just be careful because it could still outtake this low and then you have to restructure the trade. I still think it's we'll probably see a bounce here in the near future. So I like JD. This thing's a pretty large market cap name, 29 billion, pays a little bit of a yield, but it's clearly in an overall downtrend. So to see a bounce in the near future, if you try to scale into positions, if you're a long-term investor, it's going to be a name to definitely keep keep an eye on, despite its really, really poor performance so far. And then BABA is another one, right? You see this nice little positive divergence that's currently forming. We had a nice volume bar the other trading day on Friday. That could be because we were coming into OPEX, but you had that positive divergence in both the MACD and the RSI. And we took out the low of this big volume day, but we're still holding kind of above it. So I think this could set itself up for a potential bounce in the near future. It's just you're really, it's really reaching for a potential, it could be just a short-term bounce and an overall downtrend. What you want to see is this to start flattening out, these to start flattening out, 20 to start turning up, and, price to come like so, like that. And these to come back around. And then that's where, you build the bottom. People will say it's an inverse head and shoulders. It's a rounding bottom. And then potentially from that point, that really sets us up for, a little bit more risk, a better risk trade, better risk to reward trade. But still nonetheless, just something to keep an eye on as these big dogs have been getting hit down. If we take a look at SPY on the 15-minute time frame, these are the updated daily expected moves, and I provided you with the weekly expected moves, something that I share with my Discord group. I'd share them the dailies and the weeklies, but for the Qs, SPY, IWM, when that's Monday, Wednesday, Friday, and then I get the weekly expected moves on a bunch of different products too as well. But the SPY is the bigger dog, and then the SPX is the bigger product too as well to keep the close eye on. And as it stands right now, I mean, today was, we gapped up and we went sideways, right? We hit the upper daily expected move and we flattened out, but we're above a rising 5-day moving average. So that to me is bullish. We're above a year-to-date anchored VWAP. So that to me is bullish. And then if you take a look at gamma levels, we're above the gamma flip line, which is at 47.90 right now. And that's a positive sign too. So this is where dealers look to buy the dip and sell the rip. So if we, gap up, they might sell into it. But if we sell down, they might look to buy into it. So another couple gamma levels to watch out for is the new call wall up there at 4,900, as we're starting to get some pretty good exposure up into that level. And then beneath us going into tomorrow, 48.40 looks like local support. These 0-day put walls were for today. So these I'll typically post in my Discord in the morning session. Sometimes I do, but you can see here we hung around that level. We couldn't really quite break above it for the pretty much all of today. It was like 48.60, 48.65, and then we had a gamma level right around here, and the put wall for puts early in the trading session was about 48.15. But this will change come tomorrow. So the big ones to watch, the bigger one to watch would be 48.25. But then the local support would be 48.40, and then we got to pay attention to this 4,900 up there. As far as going into the remainder of the week, we're in the midst of earnings season. So we have, before the open, we have Verizon, GE, 3M, got a couple other big names down the list. And then after the close, we got Netflix. So that'd be one that's to watch. And then going in on Wednesday after the close is Tesla. And then we have Intel, Visa, and some other names there. So we're coming into, some of the bigger names. I'll try to update the expected moves on some of these as time goes by. And then going into tomorrow, we have Redbook year-over-year sales. So we'll see what that comes in at, but nothing too crazy. Nothing is considered a significant report. A couple auctions, Richmond Fed stuff, and then the Redbook numbers. So just be aware of that. Have the time on your calendar. These are Pacific Standard Times. So 7 a.m. would be 10 Eastern Standard Time. That's all I got for you on today's episode, everybody. Hope it helps out, gives you some insight to what it is that I'm seeing in this market. See you later.